Hey everybody, Mark Gilbert here at Gilbert Realty. Thank you for coming back today. Hey, look, I want to bring some things up about appraisals. I literally just got my first deal back with a low appraisal. I'm actually surprised in a couple years. Actually, I do believe that this appraiser is low on this property based on comps, because when you do an appraisal, you have to do it on existing sold properties, usually typically within the last 30 to 90 days. Okay, within a certain area, within a certain radius, if you can, and similar in like homes and condition. And I do believe he's low on this one, but this is one thing to keep an eye on. I remember 2008. I remember what was going on. And in 2000, late 2005, 2006, appraisals started coming in lower. We would have an offer on the table for 150. We'd get an appraiser come in at 144, 145. They started to put their foot down, the appraisers, because they could see a trend in what was going on with prices too. Okay, you got to remember they're doing this on a daily basis, the busy ones. But after 2008, when everything, the manure hit the fan, they created what was called, out of the Dodd-Frank bill, okay, right here. Okay, was a appraisal management companies. Now, they've been around for a long time. Appraisal management companies have been around for 50, 60 years or more. Okay. But what they created was these companies that were supposed to be independent from your lender. Okay. And that they would order an appraisal through this company who hired the appraiser within that area if they were good and they had a good performance and track record to go do the appraisal, and then they would submit the appraisal to the AMC, who in turn would send that out to the lender. But the problem is the Dodd-Frank bill, which is always the case when it comes to the Wall Street Reform and Consumer Protection Bill. I mean, you gotta watch these funny little things, right? These funny names. They exempted banks from having to use them. Okay? And they knew that after 2010, most real estate brokers, okay, dropped out of the business. They were no longer able to lend. Okay? And let me tell you some differences. There's a bank, which we all go down to and deposit our money. We can stop it at a branch on a local corner. There is what's called a mortgage banker, okay, who can broker loans and also do their own financing. So they call them a mortgage banker. Then you had mortgage brokers who don't do their own loans. They go through typically a bank, or they're kind of like a wholesaler. They sub it out to a bank and they sub it to a mortgage banker. They use their loans to qualify their client. Okay. Those people are gone. Mortgage brokers are they're gone. At least in New York, okay? So they got rid of the mortgage broker, okay, who this act was supposed to rein in. They got rid of them. And then they exempted whoever was left, which were banks, pretty much, except for a few mortgage bankers, okay? So they exempted all the banks, who are now doing a lot of the lending, which is hilarious. So they bring up this law and they say, hey, you got to use AMC companies now. Got to make sure that you're using these, and all that did was make AMC companies go from getting maybe 10% of the appraisals to over 90% of the market. Then they started creating competition among the appraisers for fees. So an appraiser could charge anywhere between $400 and $500 before, is now charging maybe $200, $250 if they're lucky. And let me tell you, sometimes, you're doing a lot of work on an appraisal. There's a lot. It's a lot more than people think. Okay? And it became very troublesome for a lot of these appraisers. They couldn't make any money. I mean, they had staff. I mean, just to be an appraiser in New York, you got to come on. You have to train under an existing appraiser. They have to hire you. They have to bring you in. There's a bunch of stuff you have to do just to be an appraiser, a bunch of training, which is ridiculous in many ways. Okay? And even then, some of them are wrong. Okay? More so than you can imagine. But this Dodd-Frank bill is so ridiculous that what happened was, here's an article. FDIC's new mortgage appraisal rule ignored lessons of the Great Recession, and they sure did. But this article is about 9 years too late. So what it says here is, after a vote today by the FDIC Board of Directors, banks making home mortgages will no longer need to obtain an appraisal for mortgages under $400,000. With the increased threshold approved by the FDIC, a total of 72% of home mortgage transactions will be exempt from the Dodd-Frank bill rules protecting the integrity of the appraisals. The vote, quietly supported by the Consumer Financial Protection Bureau, raised the existing threshold for mandatory appraisals from $250. Okay, so here they are saying, look, we got all these things in place. We're not going to let this happen to the real estate market again. And this is what happens in 2019. Again, making the situation even worse when it came to appraisals. Okay, so these people learn, but they never change their actions. And the Dodd-Frank bill did a bunch of other things that were just ridiculous, total over-the-top regulation on pretty much common people, not banks. Okay, so this is really what's going on. So when I got my recent appraisal back on one of my properties, I was quite surprised my appraisal didn't come in, because I'm pretty sure I priced this thing really good. And we did sell near asking, okay? And I know that when I did price this property, when I had a price, last month, I'm pretty sure I used what was in that area within a certain radius. I can do a lot of the same things all the appraisers can do, okay? I can see all their data. I see everything that sells, and I narrow in my geography. I narrow in all the features of a home to get a good value, okay? So I'm just telling you that this is probably going to be the trend coming on. I did a video last week about, okay, there's going to be a negative growth of real estate. That's on my last week video. And this week, if they don't manage the real estate market by higher interest rates, they will start managing it by appraisals. Okay? The bank says, I ain't going to lend on this. Okay? Or if VA, FHA come back and say, look, we want you to go lower than we want you to go where we know the house is going to be, not what we're showing as comps. Now, they shouldn't be doing that. Okay? And realtors are probably going to have to fight to get their values based on the criteria that should be used for a house sale. Okay? So let's hope that that's not the case, but I have a feeling it's going to, because I remember 2008. I remember when appraisals started coming in bad, I had to call them up on the phone and say, hey, do you have a couple grand? And typically, in 03, 04, 05, they would say, yeah, I could do that. That's not too much of a major thing. But in 06, 07, they're like, look, we can't do it. There's none. Not going to happen. So if they can't control the real estate market, slow it down with interest rates, with more regulation on lending, making it harder for you to get a loan, they will control it by appraisals. Okay? So there's a third route they can control real estate market. And that's kind of where it's at. I am kind of shocked that they got rid of this here for the banks, because the banks really are the ones that need to be watched. Isn't that obvious, right? With the recent crash of SVB and the other bank there out of New York, this is a common trend among these bankers, where they kind of run over everybody. They do shady things within their companies, and nobody really does anything about it. And this is the reason why they created a Dodd-Frank bill, just to watch over these appraisals like this. And look what happened, right? So AMCs were a good idea. They've been around for a long time. A lot of people in AMCs made a lot of money. But then what happened was the bank said, look, we're not going to use your AMC. We're going to create our own. It's going to be in-house. Okay? And that just doesn't work. So basically what the bank's saying is, we're going back to 2007, 2006, because it was so much easier. Okay? So anyways, that's what's going on with bank appraisal. So if you're looking at the real estate market and you're saying, between interest rates, between lending criteria, another way they can really manipulate this market is by the appraiser. And let me give an example. I know another agent, a friend of mine in the business. He did a deal not too far from me, about 5 miles away. They had a list for 159. Now I thought the list price was a pretty good price, but in everything that sold, it was a townhouse. Okay, no big deal. It was 149. Sorry, and I thought it was priced right, and there was some competition on it because it was a pretty good area. So he had another offer coming in. So my friend, his buyer, really wanted this deal. It was his cousin. She'd been looking for 6 months. She wanted this deal. He went 40 grand above asking. Okay, 189. And she had to commit, because this house had some action on it, that if it didn't appraise, that she would come out of pocket the difference. So if it came in at 159, she had to come out of pocket an extra 30 grand above her down payment and closing cost. So let me tell you what, it appraised for 189. Now, you know what the difference was? It was a bank. Big difference. Okay, that bank came in at 189. The deal that I'm doing now myself, that just came in with a low appraisal, is a mortgage banker. They're not under the same umbrella as a bank, so they're under tighter restrictions. So right now, somebody's doing, if you want to hire appraisal, my guess is, unless somebody really keeps an eye on this, banks are going to still come in at a high. This should have never appraised for 189. No way. Not even close. But it is happening. And I'm sure if it's happening here in my area, which is a medium to smaller city, it's happening all over the place. It's going to happen in all these larger cities, New York City, California, Texas, Florida. It's going to happen in a lot of these places. If it's a bank, the banks don't have to worry, as we just found out, about being responsible. And that's kind of where we're at. So anyways, keep an eye on the appraisals. It'll all be interesting. I'm going to check out with some friends. I talk to a bunch of mortgage brokers and loan officers every week. I kind of get their feedback, what's going on with the market. And so a lot of them are worried. They're worried about where the market is. Or they're worried about what's going on. And a lot of them are having a hard time making their payments on their expenses every month. So let's see what happens. Hopefully it goes for the best. And if things change, I'll let you know every week. So anyways, have a good day. Like and subscribe down below, please, if you can. If you would like to buy something, we are a mortgage broker, or actually a real estate broker in upstate New York. We cover Syracuse, Rochester, Utica, Oneida, Watertown, New York, and other areas surrounding all them. If you're looking for properties or you're looking to sell a property, feel free to give us a shout. We can help you out. And have a day. My name is Mark Gilbo. I'm a broker for Gilbo Realty, and I'll talk to you soon. Bye.